Good morning and welcome back again. We want to start our class for today, and this is our second lesson. And what we want to focus on today is how you can calculate the taxes for the imported goods. Most of the time, we find that goods are being imported from the far land. And once they reach your territories, it is the duties or the role of the customs to ensure that these goods are the duties in them are computed, and the person, that is the importer, pays for the import duties and any other relevant duty before they are actually cleared out of the port. So how do we calculate these duties? Now, one of the key things which are normally required whenever you are calculating customs duties, one is what to call the freight. You need to have a freight, and a freight here, a freight invoice. That is, a freight invoice will actually shows how much you paid in terms of the shipping cost. The other thing we need is an insurance, and also we need the cost of that particular item. That is how much that item was purchased. What many times it is normally denominated as a FOB. Sometimes we call it an FOB. Remember, FOB also in some other cases it is used as an Incoterm, but in this case sometimes the cost we can refer to as an FOB. Now, so when you're sourcing products from overseas suppliers, it is essential to accurately calculate the landed cost of imported goods. So in order to do that, you must clearly understand all the additional costs and charges involved in the supply chain process. And before contacting an overseas supplier and get quotations for product, make sure you have a clear idea of the landed price of the imported goods. So we have a brief information that need to be information you need by the time the goods are ordered, shipped, customs cleared, and delivered to your door. Now, how to calculate the landed cost of imported goods? One, receive a detailed quotation from your supplier with all details confirmed. So this quotation will include things like the shipper's details, the consignee's details, whom in this case is you, the Incoterms that are used, and in like this case we know that we're using the Incoterm 2020. The Incoterm 2010 came to an end by 31st December 2019, but from 1st January 2020 up to 31st December 2029, we'll be using the Incoterm 2020. So you also need to know what the Incoterm 2020 talks about. Then you also need to have the port of loading, that is the port where these goods were loaded on the ship, the port of discharge, which in this case, if it is in Kenya here, we'll be talking about the port of Mombasa. Currency, and the most common currency used in international trade is the USD. Then product details, also need to get the product details and pricing. HS code, that is harmonized system codes. Each good which is imported normally have got what's called an HS code. Then overall packing size, shipment type, either we know you can ship by either full container, what is sometimes referred to as the FCL. We can also ship what's called the less than container load, or LCL cargo. Now, once you have those details, the second part is to understand your actual freight and additional cost of the imported goods. Just as I said, that when we want to calculate these imported goods, we want to calculate the import duties, the first thing which we do is that we must first get the freight, which is a must. Secondly, we must also get the cost of that item, and again we must also get the insurance of that item. And I want to illustrate this to you by use of an example, so that we can do it together and you see what I actually mean by saying so. So what I mean is this. I want to show it by this particular example, so that we can all see how it is done. Now here, what I want to show you here is I want to use an example. So let's assume you are importing an item. Then this item you're importing has got a freight note. The freight note is reading, let's say, 1,200 US dollars. Okay, 1,200 US dollars. Then the FOB, that is the cost of this particular item. Let's say it reads, let's say 3,000 US dollars. Okay. Then insurance note reads, let's say something like let's say that the insurance note reads something like just a moment. Yeah, so what I was saying, that let's say our insurance note reads something like, we can give it, let's say just 600 US dollars for the same. Now, we also have got what's called the duties, the import duty. We have VAT, and we have other duties. So let's say the import duty for the item is, let's say it's 20%. Sorry, the import duty is 20%, and the VAT duty, sorry, VAT duty is equivalent to 16%. That is the normal rate in Kenya. Then remember, in Kenya again, we have something which is called railway levy fee, which is also something which has come up, but we're going to see that. Now, from here now, also another thing to note here is we also need to come up with the exchange rate, the current exchange rate, and let's say our current exchange rate is equivalent to 1 US dollar, 1 USD to be equal to 108. Let's just work with that. Kenya shillings. Okay. Now, once you've muscled these particular details, the next thing for you here, is to once you have these particular details now, the next thing here is for you now to calculate what we call customs value. Calculate the customs value. It's simple to get. How do you get the customs value? Customs value, remember, we normally, but before we arrive there, we get what we call the CIF first. We get what we call the CIF first, which is equal to, we get it by adding the freight plus FOB, that is the cost, plus insurance, plus the insurance. Okay, so in this case, if you use our example there, the CIF will be equal to 1,200, you add to 3,000, then you add again to 600. Now the total there which you're going to get is going to be equal to, if you can see there, that is 4,800. So our total value there is going to be 4,800 USD. Now, once you've got that as our CIF, now we get what we call the customs value. Customs value is just the CIF in local currency. So if you want to get the CIF is equal to, the customs value is equal to the CIF. We multiply by the current exchange rate. The current exchange rate. Current exchange rate, which in this case we have that is the 4,800 we multiply by 108. Quick mathematics, please. Can you use your calculator and give me the answers there? So we have 4,800 you multiply by 108. So we get something close to from your end you got something close to Kenya shillings, that is 518,400. So that is what we get there. Now, once you've got that, now we are going to start calculating the duties. So calculation of duties, or duty calculations. Duty calculations. Now, the first thing we are going to calculate is import duty. So we first calculate the import duty, which will be equal to, we get it by import duty rate times, we multiply that the import duty rate times the customs value, multiplied by the customs value. All right. Now, I'm trying to be slow so that you can get each and every step. Now, in this case here, the import duty rate there, we get it as a 0.2, that is 20% over 100, 0.2 you multiply that by 58 or 518 400. Now when you multiply that, what we get there, it gives us a figure of, that is 0.2 multiplied by, you can help me quickly to calculate that, 0.2 times 518 400. So we get import duty rate there as 103 103 600 680, I mean 103 680. That is what he will pay as an import duty. Now from here, now we get what we call the VAT value. Since this item is not attracting an excise duty, so we'll go straight away to the VAT value. So VAT value is equal to import duty. The import duty, you add to customs value. You add to customs value. Customs value. Customs value. Sorry. So this will be equated to, the VAT value when you add to the import duty. In this case, we have 518 400. We add to 103 680. 103 680. Now, this will be equal to, that is 103 when you add it to 518 400, what you get there is 52. We get 52 8 768. That is what we get. Now, this is not what we want. What we want is the VAT duty, the VAT duty. That's what we want, the VAT duty. So the VAT duty in this case, what we do there is exactly what we do here. Just a moment, I'm coming back. So what we do is the VAT duty, we'll calculate it by getting, we take the VAT value, then you multiply this by the VAT rate, or VAT duty, VAT rate, I mean, VAT rate. So in this case, what you're going to get there is the VAT value is 528. The 528 768. You multiply that by 0.16. That is the 16%. Okay. So multiply that and give me your answer by 0.16. So we are going to get a figure of 80, that is 84,602.88. Okay, so that is the figure which we get as the VAT duty. Now, the next thing here, once we've arrived at this point, we calculate what we call the GOK fee. The GOK fee. Now, this is also commonly known in Kenya as an IDF fee. GOK fee, or you can also call it an IDF fee. GOK stroke IDF fee. Okay. Now, how do we get this? It is simple. Initially, it used to be 2.25% of the CV, but currently there was some adjustment which they wanted it to be 2.5%, but currently what is being used is 2%. Currently being used, it is being reduced maybe due to this pandemic. So currently you're using the 2% instead of 2.25%, but you're using 2%. So let's say we're going to use the 2%, of the customs value. I think we know, remember when we were starting, we had the customs value figure, and I think you can see it here. This was our customs value, that is 518,400. So we multiply this by 518,400. 518,400. Now, when you multiply that figure, what you're going to get there is you'll get that is 0.02. You multiply by the 518,400. You'll get a figure of Kenya shillings 10,368. Okay, so this is an IDF fee. Then another thing you need to note here is that in Kenya, when you're calculating this IDF fee and you find any figure that is below 5,000, ignore that figure. The base figure is 5,000. So if you, let's say I calculated my GOK here, or the IDF fee, and then I ended up with a figure like maybe 4,368. So I ignore the 4,368, then I use the base figure, which is 5,000 in this case. So I'll use the 5,000 rather than using the 10,000, using the 4,368. Okay, but if it is above 5,000, just use the figure the way it is. Okay. Now, the government of Kenya, again in the year 2016, they introduced another levy which used not to be there, and this is called railway levy, railway development levy. We know we have the SGR there. Now, the railway development levy also, they revised it upwards. They wanted it to be 2% of the customs value, but currently that has not been effected. So what we are using currently is the 1.5. So the railway development levy is achieved by 1.5%. 1.5%. 1.5% of the CV again. The CV, that is in this case, our CV here was the 518. That is the 518. Okay. Okay. So the 518, I was just checking something there, if the figures are okay. 518, 400 of that. So what do you get? Get me your answer there. If you quick mathematics, that is 0.015, you multiply by 518. I hope you've already got your answer. 400. So I get my my calculator gives me a figure of 7,776. This is in Kenya shillings, remember. Okay, this is Kenya shillings. So from here now, I already calculated the VAT, already calculated the import duty, and I've also calculated the IDF fee, and I've also calculated the railway development fee. So what remains? What remains is now simple. What remains here is to get the total tax payable for this particular item. So total tax payable will be equal to import duty plus VAT duty plus IDF fee plus railway development fee. Okay, hope we are together. So in this case, I think the answers are there, open to you. So we have import duty we got 103, if you can remember. We got 103, 680. We add 2, IDF fee is 84,000, 602.88. Then again we add these 2, 10,000, 368. Then again we add it to 7,776. So from there we have 7,776 plus 10,680 plus 84,602.88. Yes. So we have 10,000, here 10,000. We have 84,000. Oh, how comes this one Admiral Bailey? So this shouldn't be here. Yes, so the 3 import VAT, IDF fee, no, this is 103, sorry, this was 103, sorry. So plus the 10,000, 368. Now let's get the total there now. Let's get the total there. It is going to be 103,680 plus 84,602.88. You add to 7,776. You add to 10,368. Good. So for this particular item, this person will be required by the customs authorities to pay a tune of Kenya shillings 206 426.88 for this cargo to be cleared out of the port. Right. Yes. So it is as simple as such. This is the way duties are normally calculated. And remember that there are those items which also have got excess duty. The procedure is the same. Okay. Only that now add another segment for the excess duty. But remember again, another thing I need you to remember is that sometimes when you're importing, remember certain goods are not moved on the CIF. That is the cost, insurance, and freight, which means that if they're not moved on the CIF, they can be moved on what called the CFR, cost and freight, which means in this case, the insurance is missing. And when insurance is missing, the insurance can miss for two reasons. Either it can miss that it is secured locally, as the case right now, whereby Kenyans are being advised that they don't secure insurance internationally. Because, for one, when you secure insurance internationally, let's say with a firm in China, and a problem arises and you want to be compensated, it is very difficult to consult or to contact that insurance firm in China. In fact, if they get that it is you complaining, they'll start talking to you in Chinese, and which means that this is going to make compensation to be very difficult. And that is why members are being urged, that is, traders are being urged, that they secure insurance with the local firm. And this one is being spearheaded by an organization known as East Coast Secretariat, which is trying to advocate for local insurance, that traders, they secure their insurance with the local firms. We have got the Samarcos, we have got several insurance firms, Jubilee and all that. Okay, those ones which can secure cargo. One, the reason is that it will be easy for one to go and claim his cargo in the event that there is a damage, there is a loss, or there is anything that has happened to it. You see that? So in this aspect, if the cargo comes, it is not stockyard secured, the owner didn't take the local insurance, neither did he or she secure it internationally. What remains now? What remains here is that now we are going to still calculate the CV. We must still get the customs value so that we can continue. So what do? If insurance is missing, this is what we do. Find that the insurance is missing. Then what we do is this. We take 1.5% of 1.5% of the cost plus freight. Okay? The cost plus freight. So it will be 1.5% of the cost plus freight. Okay? That is. So it means that this is going to help us to get the insurance. So it is like an estimation, okay? That in the event that it is not provided for, then we can get it by adding the FOB of that cargo plus the freight, because this one must be there. The cost, the item, you cannot import an item without a cost. It must have a cost. You cannot import an item without paying a freight. Freight, if you didn't pay it, if it is not prepaid, it will be paid, it will be what called the freight collect, which means that by the time you're going to take your cargo, you must pay the freight. So these two items must always be there. So what we mean there here, that like in our case there, we had, let me just go back to my case, the above case scenario, where our freight here was 1200 and the FOB was 3000. So in this case, if you use the same, we just say that is 1.5% of 3000 plus 1,200. Okay, so it will give us 1.5% times 4,200. Yes, the quick mathematicians, what's the answer? Yeah, you're good in mathematics, huh? So that is 0.015 you multiply by 4,200. So when you multiply that, what do you get? Yeah, we get a figure. My calculation is my calculator is telling me that it is 63 US dollars USD. Okay, that is according, I don't know what, I think that's it. Yes, yeah, so 63 US dollars. This is the cost of insurance. So it means there now, once now we know the insurance, now we can get the CIF. We can get the CIF, which in this case is going to be equal to the same formula I gave there. That is the cost plus the freight plus the insurance. Okay, so in this case we'll have the 3,000 plus the 1,200 plus 63. So what do you get? It is going to be 4,263. 4,263 USD. So this is our CIF, which from here now, the rest of the formula will continue. From here, we are going to get the CV, which we said, the CV, if we want to get the CV, it is the import duty, the CV, sorry, the CV is the CIF you multiply by the current exchange rate. Then from there, we get the import duty, we get the VAT duty, we get the GOK duty, and also we get the GOK fee, I mean, and then we get the railway development fee. Up to there. If there is any question, go to the comment section, leave your question there, and I believe you have learned something, and you can now calculate for your client. If your client is coming or is importing an item that has approached you, how much am I going to pay the KRA? You can be of assistance to that person. For the motor vehicles, till next time, I'll show you how to calculate the VAT or the duties for the motor vehicle. Thank you very much. Till next time. Bye.